Welcome everyone. On today's video, we're going to take a quick dive into why I think the next quarter Canadian bank earnings, we're going to see a little bit of a pop on the share price. And when I give my reasoning, you're going to understand why, because I'm going to pair it with what's happened in the past, and it should make some sense to you guys. Just quickly, we're going to touch on how the banks have done in the past year. And if you invest in these companies, you should already know pretty bad. TD and Bank of Nova Scotia have done the worst at around minus 14% for the 1 year period. Even Royal Bank's down almost 6%, and that's usually the best bank performance-wise. Well, them and National Bank, I should say. Here is the outliner. Here is CIBC, and you'll see it's down 1.5% on a year-over-year basis. And you're going to be thinking, well, it's still down with the other banks, but nowhere is near. And that's the key. Traditionally, CIBC and the Bank of Nova Scotia are the, in quotation here, the worst Canadian banks. They're still amazing banks if you hold them to a worldwide standard, but they yield the highest and they typically perform the worst. And you'll see, why is CIBC not down that much year over year? And you can see there's a big uptick starting from October. That reason is their earnings reports. So all the banks put out their earnings reports. The Bank of Nova Scotia got hit a bit hard because they had too much provisions for loan loss, as the other banks did to an extent. What CIBC did, which was different, is they didn't put as much away. That's it, guys. That's the magic here. Now, usually when one bank does this, the other banks follow suit, and they do it in the next quarter because they have to wait for someone to make the first move, and then they kind of follow. And we've seen this in the past. I'm just going to quickly reference that period. The Bank of Nova Scotia was actually the first one to do it coming out of the pandemic, and they had a good uptick because they released a lot of their loan loss money. So their financial quarter looked, well, not amazing, but very good. So the other banks did this, and they said, okay, well, if they're doing it, let's follow suit. The other banks are being a bit more cautious, but they usually move lockstep. One's just a little half a step behind, one's half a step forward. So in my opinion, the next quarter for Canadian banks, since CIBC moved first, the rest of the banks should be moving on releasing their loan loss provisions, and they're going to probably put a little bit less away because we have indications of interest rates not being as high in the future. Nothing's a guarantee. This is my opinion. I wouldn't bet all the money in the world on it, but I think this is a good theory and a safe bet, guys. On a side note, I would really look at the Toronto Dominion Bank to pop the most, because they've been just really hit in the last year, and it's, in my opinion, it's my favorite of the Canadian banks. You can argue for Royal and National, that's fine. This is the one that I like the best. I think it has the most potential going forward, and yes, I know they have a little bit of a money laundering case going on there in the States, and the government's going to maybe slap a little bit of a fine on them. That's fine. It's really not a big deal. This type of thing happens all the time. I like the Canadian banks for the next quarter, and I like Toronto Dominion Bank the most. See you in the next video, guys. Enjoy.